disco extravaganza. Woo! Tell me what. No time. That is true, baby. Woo! Disco's always forever. Remember that. How you guys doing? What's going on? I hope you're doing fine. I hope you're doing wonderful. As a very nice guy, his username is Mitch. He's saying that I don't want to say good things about myself, but he's saying the simplicity of my explanation makes it easier. And I thank you for that. It's not only simplicity, it really is simple. It really, truly, truly is simple. And we make things hard when it's really, really simple. So everything is simple, everything is easy. Just forget about emotions, forget about your narcissism, and focus and try to be flexible. As I explained many times, in Elliott Wave, I love it. It made me money in the past, but I am flexible with it. The very idea of Elliott Wave is flexibility. You change your waves. You change. It becomes big A, big B, whatever. So it's not only I'm being simple person. No, simple explanations. It's because it is really simple and we should always keep it simple. So this is the Dow Industrial, the daily time frame, and it assumes 5 waves down, a corrective wave 2 and 1 2. As I said, 1 2 and might be a 3. I think 3 is registered because old resistance becomes support and vice versa. We broke out of this box. Remember, if you guys watching my videos, I put a box here and think 127 Fibonacci extension here and a box here and 127 Fibonacci extension here, and I made this box here, and we try to get back in a box, and the resistance became support, and we had a quasi bull trap, a bear trap, and boom, and we back in the box with very orderly Elliott wave counts, and I think this is the registration of the third wave, the mini one, and this is the 50-day moving average, and we broke below it. That tells you something. Usually, if the price action is below the 50 moving average, 50-day moving average, it's just to sell. Don't stay. So that's simple. It really is simple. Forget about me right, I'm always right, whatever that is, And this is what lose your money. And you call the stock market a big casino because you make it as casino. And you follow people, morons like me in YouTube, and Twitter. Just read the books, buddy. I might be full of it. Don't take me as a source. Read the books. Okay, if you read the books and you see what the behavioral financial people are saying, maybe they get a point. Just try to apply their ideas. So a dip below the 50-day moving average, it's not good, and you have a price rejection from the old resistance that became support, and now you're breaking below it, which is very bearish. Okay, this is another simple ideas. Okay. 10-day moving average. As I said, up buy above it, sell below it, be neutral when it's going sideways. And now be bearish, but I'm not asking you to sell short. It's very risky. But be neutral here and be bearish here. It's very simple. 10-day moving average. It doesn't need a technical analyst to understand it. And I tweeted this yesterday after the close. Not today yet. Yesterday after the close. It caught my attention, what I call, with my stupidity and narcissistic personality, I call it disco combo, even though everybody knows about it. How dare you! I usually notice when you have MACD crossover with bearish crossover in the stochastic, some bad things happen. And historically, this is the truth. This is the weekly time frame, by the way, for the Dow. And you see what happened the last time it happened, and the one before that, the one before that, the one before that, the one before that, the one before that. And it's happening right now. So it's definitely a sell signal. And what do you do usually? Fibonacci retracement from this high, low to this high. You look at the price memories. This is how you find where the buyers are. But overall, I don't recommend it. It's like catching a falling knife. And as I discovered too, the before the what I called, I don't know, called it the disco signal. This signal right here, every time you have a bullish crossover between the 20 moving average above the 50-bit moving average, in the put to call, the equity put to call, something happens. So the first time it happens, boom, and something happened in the market, and before that, it doesn't flash that signal a lot. Even though I said last time we might have another flush, but I was assuming that the signal will, because the bullish mode is still the 20 over the 50, this will give the signal. But no, I think it's the first time. So the first time it happens, something bad happens. So this does not mean it's going to be in effect. So it's the first time. So once this bad boy goes back up, another sell signal. Okay, so I'm trying to amend the disco signal. Okay, but it's always very important to see a change of sentiment in the put to call. And as I noted about this bullish divergence between price action and stochastic, and really something bad happened after that. So we're playing with the disco signal. The first 20-day moving average above the 50, something bad happens. The change of sentiment, something bad happens, and you could get the change of sentiment by the positive divergences, by a MACD crossover, you treat it like an asset class, and really by itself it does something, and you can test it. And I'm glad I looked at it. I'm glad I'm using it too. I really hope you guys use it too. And I'm really sorry if it gives you false signals, but it never gave me any false signals, especially the first bearish crossover. Something good happened to the market, and vice versa. Okay, so this is the USD, the daily time frame. And I tweeted yesterday about gold is not reacting to the dollar movement, because the assumption that the dollar price action is below the broken trend line. But once this bad boy goes over it, gold will catch up. That's why a nice gentleman by name John in Twitter asked me about my views in GDX, and I asked him to watch the video. I didn't ask him to watch the video to promote the video. I was asking him to watch the video to see the importance of correlation. When I stated that, watch about the inflection points in your correlation. In this case, it's the dollar. So there's something, the bullish development in the dollar. So that means don't be bullish in GDX. GDX is dependent on gold. Gold dependent on correlation. It's really hard, but it's easy sometimes to use the correlation to predict a very probable move. Good deal. And this is the monthly time frame for the USD, and it's in a bullish. It's forming bullish patterns, and it's not the end of the month, so we're not going to talk about that now. But in conclusion, it's always easy to keep it simple. It's really what gets us in trouble is always belief that we are always right, belief that there's always conspiracy against us, belief that the big boys are trying to fool us. That is not true. That is not true at all. The big boys, a lot of them are not very smart, and I said that many times. They really are not very smart, and I rubbed shoulders with many of them. They really are not very smart. So you give them too much credit to think they control us and they control the market. This is not true. So believe in yourself, only in yourself, and be flexible. Change your views time and time again. Don't be like some gold bugs, like they think the whole world's gonna come to an end and only gold would shine. This is another problem with belief. Be flexible. Things change all the time. Enjoy life. And please like, subscribe, and share if you want me to do this more often. And love disco. Please do love disco too. Disco is the real word of Zeus! The Greek gods! I love you guys. And really, disco is forever!